everybody. This is Mark. We're back here for afternoon call, and it's Friday, so we're going to keep it a little brief. So the market obviously has found a little bit of weakness over the last few days. This week was the first day you saw it. You got a little signs last week, but overall, I personally think things are healthy. I think you got to, I've taken off a lot of swings, in fact, most of my swings, but people are like, do I go short and do I do this? After 8, 7, 9 days down, whatever we have been, no. The answer for me is no. Trading is all about opportunities, finding that level that makes sense, risk versus reward. And I think we're getting to a point, if we get a gap down on Monday, you're going to have a lot of buying opportunities across the board. Did sentiment change? Maybe for a few days, but you're the same people and the same traders that when we're at new highs are going to keep buying new highs. And that's the key to trading. Understanding where you're at, where you live, what makes sense. So what makes sense now is being certainly more specific and being much more of a sharpshooter. The technicals are telling us we need a little bit of a break. But a break doesn't mean net short necessarily, but it means finding selective opportunities. Best in breed stocks that have come down to key moving averages, I'm looking at. I'm looking to find opportunities. And a lot of them have come down, anywhere from 2 to 7%. That to me is the opportunities I look for. Could we pull in, 5 to 10%, like everybody wants it, or 20%? I don't think that's going to happen. Not with it being the election and coming into earnings. So, certainly the 8-day moving average, we're basically hovering at. And, we could get down to the 50-day, which is 140, 150. If that happens, it will be a very good buying opportunity for us across the board. I'm not sure that's going to happen the way everybody wants it to. Leadership is lacking a little bit. Apple, which of course has always been a leader, is definitely showing some weakness. But whenever anybody shows weakness, everybody wants to buy it at 700. But then when it gets to 6, and right here, 660 to 650 in that range, say, 650 would be, I think that's the one of the key moving averages. I'm sorry, I can't really look at it. 650 is a 50-day moving average, 649, whatever. That's where you're going to have to find an opportunity to get involved with it. So right now, I'm stepping away. I don't have a position in Apple. I don't have a position in Google. I've taken a lot of my swings off. But to me, I'm looking for that opportunity. Do I think they couldn't come down? Yes. Am I going to get myself twisted around to just put on net shorts? It's not how I trade. It's not my strength. After 9 days down in this tape, and we have been down for a considerable amount of days, and we're getting to oversold. So just be smart in your execution, and we'll be okay. Going through a few stocks, Google hanging in there, but at the same time needs a break, needs more digestion. You want to see the moving averages play a little catch up. Apple, I talked about it. 660 should hold. Yesterday, previous day low. I don't like how it gave back a lot of yesterday's move, but at the same time, a little back and forth action is in the cards. It's really at this point, there's no swing that needs to be on, but minimum, know your levels accordingly. Some of the commodity stocks, the OIHs and some of the others, they've come down quite a bit, and some of them are even at OIHs almost at the 200-day. To me, that's an opportunity to step in front of them, even though technically you want to time in a little better because they've come down. They need a little back and forth, but in a few more days, I think most of them will hold their 200-day or 50-day, whatever they're at, and I think it will be buying opportunities for us to really get involved with and go from there. The banks, same type of trade. Right now, you have the 8 and 21-day curling around. Goldman, I have Goldman up right now. It's still holding that. Could it get down to 1010, 108? Possibly. That would be a tremendous buying opportunity if it gets down there. So I don't think you need to go net long because it doesn't seem like we're going to do that reversal quite yet. But at the same time, just shorting after a move, 122 is where we were talking about it. Obviously, we covered a little early, but it's now 113. I'm looking to re-enter, find our entry level on a smaller time frame to make some trades. That's how I'm looking at this market. I think the ebbs and flows of the tape are telling us you can continue to keep moving your feet, finding different sectors, finding different stocks in individual sectors, and really take advantage of what's in front of you. The best thing I could say to everybody right now is play to your strength. If you love shorting, well, you had the opportunity over the last 2 weeks to take advantage of it, and hopefully you did. If you're a guy like me who likes to buy on pullbacks, I'm going to be licking my lips and waiting for that opportunity in the next, whether it's next week or the week after, knowing that earnings are coming into play, for an opportunity to get back long, because my thesis that we're going to be running into the election has not changed. But the technicals are telling us I need more time, and I'm going to respect them because that's what I do. So overall, guys, be a little smarter, certainly be a little bit more of a sharpshooter. Today, definitely Apple showed weakness. Google was sort of a non-event. There was a few ideas. Under Armour, Nike, had a little bit of a rally from, earnings, but nothing to talk about and write home about. And I don't see a lot of good-looking charts, but that just means I'm going to be sitting on my hands and waiting for an opportunity, whether it's long or short. I'm going to let the market tell me accordingly. And again, we are getting to oversold, so that to me, maybe one more day down. If we do have a gap down day, I'm just letting you know that's going to be an excitement for me, because I'm going to probably put a lot more money to work if that's the case. If we have a gap up, we're obviously back to business, and we just got to wait for different opportunities. I don't know. It's the first day of the quarter. On Monday, we'll have to wait and see, and hopefully we'll have some good trading. So good luck. Hopefully you had a good quarter. Hopefully you had a good month. September, I think we got a gift. We don't normally get a good September in general from a trading perspective. We got it. Hopefully you took advantage of it. And I think the last quarter of the year is normally, from a trading perspective, the best. So hopefully that's still in the cards for us. And I think just be prudent. Keep learning your lessons and keep improving. Keep making your mistakes, but keep making new ones. And I think we'll all be okay. Have a good weekend, and I'll see you back on Monday.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The two-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit t3live.com and click on the Education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.